On your biggest alpha here, as you know it, Jason Noah. And yeah, man, it's been a crazy week. It's been an interesting week. It's been a very, very, very interesting trading week. So as you guys know, for FOMC on Wednesday. Okay, before we get into that, you guys know today is NFP day, which is a very important day. So make sure your accounts are funded. Make sure you guys are ready to trade. As you guys know, from now at 12, literally we're about 16 minutes into the trading competition. It started at 12, so make sure your account is funded with either 500 Rand, 1,000 Rand, 2,000 Rand, 3,000 or 5,000. And you guys will automatically stand a chance to be in the Alpha Markets competition, where you stand a chance of winning a funded account worth a lot of money. So you have 50,000 Rand up for grabs. But before we get into the details of that, you guys know for FOMC we had a trading competition. And so technically how the competition worked is all you had to do for FOMC is fund your trading account with 200 Rand. And the client who reaches the goal of 1,500 Rand first was going to win a 5,000 Rand trading account for today. Now, here's the other part about it. We don't actually have anybody who reached 1,500 Rand from 200 Rand. So what happens is we're going to split the 5,000 Rand funded account into 3 people. The guys who actually got the closest, to making that win of 1,500 Rand. So I'm going to call these guys, and each of them won a 1,500 Rand funded account. So let's see what we got. Let me see, we got first on the line. Literally giving away a 1,500 Rand funded account right now. This person doesn't know. So let's see. 529.
They better pick up.
7979. Where's the loudspeaker?
Go. They better pick up the phone.
Where do I take the volume off?
Nigga, you pay for everything here. You should know.
Nigga, I pay for everything. I don't know how everything works. Come on, answer, bro. You just won yourself a 1,500 Rand funded account. Not answering. Damn, my nigga. Okay, second option. Let's call the second winner of a 1,000 Rand funded account. Let's hear. It's a chess learn. Go play with your ballas, bro. Come on, guys. Why? This is the second winner we're calling now.
Niggas are sleeping on the money. Come on, boys, pick up.
Damn, why don't guys pick up the 012 numbers? You guys have a lot of scold, ne? I think the bank is calling you to repossess whatever.
It's another month.
Yeah, let's try the third winner. Users busy. Literally, guys, all our 3 winners, there's no one that answered the phone. Let me call the first winner again. They think it's loans, I think.
They think it's loans.
Oh.
Hello?
Hi, man, how are you?
I'm good.
I'm good, thanks. Who am I speaking to?
How can I help you?
To who?
Please.
Keen.
Please.
Oh, how are you? Oh, this is Jason Noah from Alpha Markets, champ. Oh, shit. Can you hear me? Oh, damn. Guys, just give me a minute. This guy just dropped again.
He thinks he's an insurance consultant.
Exactly. Damn. Guys, you are scared of it.
Jason,
Hi, man. How are you?
I'm good. You calling me and I'm on your line.
Oh, I'm calling you and you're on my live. And you didn't pick up the first time.
I was in a meeting, man. Sorry.
No, all good, man. So look, yesterday you were trading on Wednesday. Sorry, you were trading with Alpha Markets, right?
Yesterday I think and Wednesday.
Okay, perfect. So my brother, I'm just calling to tell you that you won yourself a 1,500 rand funded account, okay, with Alpha Markets.
Oh, lovely. Thank you.
Just a pleasure, my brother. So what you can do is you can either continue trading that account or you can withdraw the funds from it. That will be entirely up to you, okay?
Now we're gonna trade the NFP.
Yeah, we're trading NFP today, bro.
Yeah.
You'll be trading. Okay, no, perfect. So what I'll do is my PA will be in touch with you just to give you your details, and then I think from there you can take it, okay?
Okay, thank you.
100%. 100%. Congrats once again, champ.
Congratulations, bro. Congratulations.
Thank you.
Easy, champ. Bye. Thanks. Okay, we just gave away 1,500 rand funded account. The other guys are not answering, so I don't know what we're gonna do with that. We'll probably just try them again later. But as you guys know, this is the one and only way. It's the Alpha way, baby. Always there, to give back to the community. We never just looking out for ourselves, but also for our traders and making sure our traders turn into profitable traders. And with these funded accounts, you guys can be a step ahead, to reach your trading goals that you would want to reach. So with that being said, without any further ado, I'm going to hand it over to Mr. YC. So we're going to get into the daily pulse. He's going to be talking about NFP, what you should look for, what to expect. So make sure you guys have a good session. Take a lot of notes, and don't forget, we're giving away 50,000 random funded accounts today. So make sure you're trading. If you're on this live video right now, make sure you're trading. Make sure you have them trades running, because at 6 o'clock, we're giving away 50,000 rand in funded accounts on my Instagram account live. You're gonna know who the winners are, so make sure you guys are in with that. You know what's up? It's the biggest alpha, man. NFP day. Let's make some money. You know what's up? Ow! Ow! Yes, sir. Damn, nigga been in the gym though, cause the pump. Too clean. Alright, Mr. YC, so you take over. Love you guys. It's always love. See you at 6 o'clock. Make sure you tune in. And also, we're giving away a 3,000 rand wallet. Do not forget that. 3,000 rand e-wallet for the most reposts on my video today at 6/2. So we're giving away a whole lot of moolah, guys. It's too much, man. Let's go.
All right, ladies and gentlemen, the time has arrived. The time is here. Welcome to the Friday edition of the Alpha Markets Daily Pulse, guys. Streaming straight from Mr. Jason Noah's account today. We're at the head office today, guys. You can see we're in our new studio. Jason has been showing it off. You better go to those pictures, share those reposts, and grab that 3,000 rand, all right? Anyway, guys, it is literally 22 minutes past 12, guys. And it's Friday. It's NFP day. We've got payrolls data on the back burner, guys. It's crazy. Heading into it, we're seeing some dollar weakness. And what I want to do for you guys is I want to go through some of the fundamentals so we can talk about the economic data that we're going to be looking at ahead of this key release. All right, guys? So in terms of where we are sitting, guys, I want us to just reflect back on the economic data that we had this week. Let's have a look at that economic calendar one more time. All right? It's been a busy week, guys. We had consumer confidence. We had jobs openings. We had ADP, non-farm employment. We had the FOMC statement on Wednesday. On Thursday, yesterday, we got initial jobless claims. We got the S&P Global US Manufacturing PMI data. We got the S&P Global Services Manufacturing data as well. And today, we're looking at average hourly earnings, the much anticipated NFP, as well as that highly anticipated unemployment rate, guys. All right. Heading into today, before we talk about today, let's talk about the whole week, because the whole week sets us up for what we are looking at for the remainder of today. Damn, this nigga's really tall. Let me get this chair up. All right, boys and girls. So, going into where we began on Wednesday with the Fed meeting, the main mandate for the Fed has been to bring down inflation, all right? And bringing down inflation, that to slow down the economy, all right? if you guys have been joining me on the Alpha Markets Daily Pulse, you guys will be on the same page that I am right now. And as far as where the narrative is, they wanted to bring down inflation towards a 2% target that they have, as well as slowing down the labor market, which has an overall effect of slowing down the overall economy, because inflation, guys, is driven by consumer spending. All right, the more consumer spending you have, the more demand for goods and services that we have. All right, and that's what creates inflation, when the imbalance exists between demand and supply. All right, it needs to be in relative equilibrium. All right, now with that being said, Tuesday we had consumer confidence, and we had a slight beat on the figure. The expectation was for consumer confidence to be at 114.2, and we got 114.8. So positive economic data. That's good news for the dollar. We had jobs opening. So this is a reflection of how many available jobs there were in the month of December. Okay, the expectation was for 8.7 million jobs to be available. We had 9 million jobs available. Good economic data for the US, bullish on the dollar. And you can actually see this reflected in the data when you look at the technical analysis on the chart itself. All right. Wednesday, we had ADP non-farm employment change. This is sort of like a precursor to non-farm payrolls, as it gives some kind of guidance as to where NFP could land. And what did we get there? The expectation was for 145,000 jobs. We got 107, a big miss on that. That's negative data for the dollar. And that's when we saw the dollar begin to flip at that 7-week high that it's been chilling at. Worry not though, I will turn the camera so you guys can see the chart that I am talking about right now. All right, we had that FOMC interest rate decision. Rates remain unchanged at 5.5%. All right. Maluketu says we're writing notes. Please talk less fast. All right. I'm gonna do that. All right. And then Thursday we had initial jobless claims, which was yesterday. We were expecting 213,000 people to have filed for unemployment insurance benefits for the first time, and we got more than that, 224,000. So for those of you who aren't really well acquainted with the jargon that I'm spitting here, initial jobless claims, our equivalent of that would be unemployment insurance fund, which would be UIF. All right, you guys know UIF, all right? So if you don't know what UIF is, it's essentially an insurance tax that's taken at the top of your salary on your deductions. All right, and that goes towards a fund that the government has, where they pay people who contribute towards the fund for a certain amount of period after you've lost your job. Then you can claim for those unemployment insurance benefits. So essentially, this reflects the number of people who've lost their jobs recently in the previous week and have claimed for that. So it's labor data, and we've got more people unemployed. It's reflecting that the labor market is slowing down, as was the trend going into that December FOMC. All right, then we got that manufacturing PMI data for January, and we got a beat on all those figures. All right, positive economic data in the manufacturing sector in the US, showing some expansion in the manufacturing industry. All right, today we're looking at NFP. In terms of average hourly earnings, we're expecting a month-on-month decline from 0.4% to 0.3%. So this is a reflection of, on average, how much every employed person makes per hour in the US. Okay, so this is related to their rate. Okay, and as far as NFP is concerned, the expectation is for 187,000 jobs to be created in the month of January. All right, the previous figure in December was 216,000. I expect a decline on that figure. All right, no, I'm speaking way ahead of myself. All right, the expectation is actually 216,000 jobs to have been created, but the forecast is for a lower figure, 187. All right, I've got a comment here. I hope I don't butcher your name here, but Matome, yo, dang, Matome Lisiba. All right, he's like, damn, where this nigga learn all this? I'll put in the work, G. All right, now heading into that, guys, let's look at the DXY. Let's look at the weekly pattern for the DXY. All right, so we can see what we're looking at in as far as the technical analysis aspect is concerned. What is the price action telling us? After we look at the price action, then I'll go into what the expectations are and what we're potentially expecting. All right. So if you guys are following with me, please open your DXY chart on the 4-hour time frame. I'm gonna need you to do that if you want to follow along with me. But worry not, I will flip the camera and you can just look at it yourself from over here. All right. So worry not. All right. So this is the DXY chart, guys, and you can clearly see I'm looking at the 4-hour time frame. If you look at the overall price action here, we can clearly see that we're in a downtrend. All right, we're in a downtrend, and you can see that because we're consistently creating lower lows, lower highs, lower lows, lower high, lower low, and now we're at a lower high that is moving correctively within a range. We've been range bound here on the dollar. All right, the dollar's been hovering above that 7-week high. This reflects sort of like a 1 month to 7-week high. In as far as the dollar is concerned, I think the dollar's grown about 2.5% in the month of January in terms of its strength against other currencies. All right. Another clue about the bearishness of the dollar or the weakness of the dollar is reflected in the price action itself. We're getting bearish continuation patterns. We've got ourselves there some sort of a rising channel. We've got a bear flag there. We've got another bear flag type structure over there. And this entire thing here is a rising wedge. All right, guys. So all of the signs are indicating towards the weakness of the dollar. All right. And if we zoom in, guys can clearly see we've been trading sideways. Right through last week and into this week, we've been trading sideways. Hitting the high, hitting the low, hitting the high, hitting the low, revisiting the high, revisiting the high, but not breaking above the level and coming back to the low again. Now, before I go into what the expectations are in as far as the technical analysis is concerned, all right, let's look at the fundamental report. All right, let me break that down for you guys. I hope you guys are following along proper right now. Is all this making sense though, guys? Is all of this making sense? I'm trying to bring all this complicated information to you in a way that's kind of easy and balanced to understand, and that's a bit of a challenge because there are no substitutions for some of these words, some of this jargon. All right, now let's get into what my expectations are, guys. All right, so I want us to kind of tie I think it's important to do this because you can't just take economic data in isolation, guys. You need to understand what it actually means in the great scheme of things and how you can form links between economic data and what the policy decision makers are going to do in reaction to that data. Now, by the policy decision makers, I'm talking about the Fed. Okay? Now, the Fed is now expected to begin cutting rates, guys, in May 2024. All right? According to the CME Fed Watch tool, and that comes after Jerome Powell shot down bets of a rate cut in March on Wednesday. He clearly dismissed it. A reporter blatantly asked him point blank, Mr. Powell, can the market expect the first interest rate cut by March? Because that's what the market was pricing in at a probability of 80% in December. All right. The tool now, in terms of probabilities, is now pricing in that by a 60% chance that the Fed will only begin cutting their rate by 25 basis points in May, guys. In May. Phone is ringing over here. I think it's one of the guys who won the competition. Let me see the number. 795. Nope. We're busy, sir. All right. Now, the central bank is now widely expected to keep rates on hold in March, which is a sharp reversal from that earlier bet for a 25 basis point cut, which was priced in for March. All right. Now, traders have had to kind of trim back these bets in the lead up to Wednesday's meeting. All right. Now, while Jerome Powell did kind of downplay expectations for a March rate cut, he still, guys, noted that the bank had made good progress in fighting inflation. And that is very important because the whole statement, after he came out and said, okay, interest rates are going to remain unchanged, we saw the dollar rally to a high, okay? And that was bearish for risk assets. But he came back and he was bullish, all right? There's some people here asking, what's my name? Guys, how can you not know who I am? I'm Mr. YC Sir, guys. I'm the head market analyst for Alpha Markets. But what I'll do is, let me pin my handle to the chat so that you guys can check me on my account, all right? I'm just going to pin that to the chat. There we go. All right. So like I said, Powell came out very bearish at first where risk assets are concerned. When I mean bearish, I mean good for the dollar, all right? Bearish for risk assets. But then he came around and he kind of gave the market a balanced view with this bullish kind of comments when he actually spurred expectations that the Fed will still trim rates substantially in 2024. Very important, very key. And the Fed Watch tool now shows that traders are pricing in the probability of the US rate cut coming in May. And in total, we're expecting about 3 different interest rate cuts. And we're expecting the interest rate to go from 5.5% where it is right now, all the way down to 4% by the end of the year, guys. That's almost a 1.5 basis point, a 1.5% interest rate cut. And as far as the interest rate is concerned, what is that going to do to risk assets? All right, because the market is pricing in all of this data ahead of time. Okay, markets are forward looking, guys. We traders and institutional investors, they tend to, one of my favorite quotes, they tend to buy the rumor and sell the fact. Okay. All right. So, and as far as the market is concerned, we're expecting the central bank to begin cutting rates only in May. But they maintained that they forecast for at least 5 rate cuts this year. Might be a bit too much. So, and as far as I'm seeing it, since the beginning of November, which is when the downtrend began in the DXY, since that downtrend began, the market has been focusing and looking at economic data in the sense that good news or good economic data equals bad news for risk assets. So every time we've got a higher NFP, higher retail sales, higher consumer spending, lower initial jobless claims, those higher GDP as well, you can consider that as well, manufacturing PMI, services PMI, all of that economic data that we look at through the month. Every time we got good news for that data, it meant a sell on NASDAQ, Dow Jones, gold, GBP/USD, Euro USD, all the risk assets, all right? But now the narrative has shifted, guys, all right? It has shifted substantially in the sense that we're sitting at an inflection point, and I like what Jerome Powell said on Wednesday. He said that the Fed has substantially driven down inflation and it's trending meaningfully towards that 2% target. I think right now we're sitting at around 3.2%. If I'm not mistaken, I don't have the data right in front of me, but off the top of my head, we're sitting in between 3.2 to 3.4%. The target is 2%. So Powell admits that in the year 2023, inflation is trending down, economic growth is slowing down, but is still resilient, okay? And in light of that, because inflation is slowing down and the labor market is still resilient and the economy is still growing, it puts them in a situation where they could achieve a soft landing of the economy. Now, what is a soft landing of the economy, you may ask? Or if you've heard this word a couple of times, a soft landing of the economy is essentially when the economic policy decision makers, or the Fed, or the Reserve Bank, whatever you want to call it, when the Reserve Bank manages to bring down inflation by not causing a recession. So again, if you were tuned in from the beginning of my segment, I said that inflation is created by excessive consumer spending, all right? People can only spend money when they have jobs, okay? And so the easiest way to bring down inflation is to kind of slow down the labor market. And that's what these high interest rates have done. Now, since we've been seeing these high interest rates, inflation has done its work and it has gone down. And the labor market has also slowed down substantially. So here's what I want to say. The Fed is in line for that soft landing. They're bringing down inflation and they're doing it in an environment where they're not wrecking the economy by creating an unemployment recession. Because every time, guys, you guys need to think about it this way. Nah? Think about it from a normal human psychology kind of way. Think about it if it was you.